Hello, founders and investors. Welcome back to Next Round Ready. I'm your host, Chris. We have very special guest Nishanth on the show, another quality investor that was actually referred to me by another investor we've had on the show. Nishanth, welcome to the show.
Thank you, Chris. Wonderful to be here.
So what got you to the investing level? I feel like there's always some nice backstory to how investors got to where they are.
It was a happy accident for me. A friend of mine, I was talking to him and mentioned, hey, I have enough investments in the stock market. I'd like to do something else. And I was in the middle of a ski lesson and I got a call from him saying, hey, I have an opportunity for you. You can't miss this. And invested in it. Turns out to be my first angel investment. And that's how I got started.
Wow, that easy. That means you have some like really interesting people around you.
Yes.
Do you think that the relationship part for you personally is a big key as to what's kept you investing?
For sure. I'm the kind of person who, if I don't know something, I read a book, I watch a podcast, but I also seek out an expert who I know in my life, who I can bounce ideas off of, who can help me recommend the next book and the next podcast to go a bit deeper. And so, yeah, absolutely. This person is really important to me. I'm the godfather to his children, and we get deal flow in multiple different ways because, we're friends as well.
Oh, that's a good balance right there. I think it's really good in life when you can work with people that closely that you're also had a personal relationship. I think that's like a perfect balance of what, at least me, myself, what I want as I get deeper into different things that I'm doing. Because I think it just makes it easier when you can collaborate with people you're already close with that already know you, because you get past that trust factor a lot faster.
100%. And you trust their word a bit more, right?
Yes. And that's something that has to be earned. I'm learning that in this VC world, that building the reputation and the connections and the trust, it takes so much time. It's like laying one brick a day. Like, you can't lay more than one brick a day. You just have to go really, really slow, which I can't complain and say it's bad, because I find that when you do build that slowly, it's a much stronger bond that you have with those people you've built that trust with. So it's a longer process, but I appreciate it for sure.
Yeah. Bill Belichick was it who said brick by brick. In the New England Patriot way of building up week by week and putting in the reps and learning through that, for sure. It's the same way.
Yeah, so with you, I want to talk about kind of your investment strategy. So what are some specific early signals that really make you want to invest in a startup?
The number one thing for me is the founder CEO. I'd like to see them have a very clear point of view of the customer problem. What is the problem they're trying to solve? With that, they have to understand the market. They have to understand competition. They have to also understand if it's a painkiller, something that is required by customers, or a vitamin, which is, perhaps a nice to have. And I look for that for sure. I also look for, have they surrounded themselves with a good advising team? Because I expect them to pivot multiple times. I'm not buying their first idea. That's what I look for.
Oh, that's a good point. I find that the best investors are usually in it for the long haul, where it's like, let's build this relationship where we can work together for the next 5, 10, 15 years. So it's really an investment in the founder as a person, as an individual, versus this specific product idea.
100%. And if they're a younger founder, I somehow know this may not be their last startup. So I'm investing in the person from their second startup as well, is the other thing.
I never thought about that. And so how do you decide what fits your thesis? Is it like a specific vertical you like to focus on, or a specific area? Or are you so focused on the founder, you don't necessarily care about the market they're focusing on?
Oh, no. All of that is important. It's the first thing I look for is the CEO and founder. I have a basic responsibility of running a family office. So it's myself, my wife, both of us have multiple decades of experience in the technology industry. And I have an advising team of our parents, both of whom have various experience in India, in pharmaceuticals, in finance, in manufacturing. So we wrote down an investment thesis that works for us. And it's basically multiple steps. One of them is the CEO founder. The other way that is important to us is we are trying to see a path to profitability across all stages. We understand that you raise money, you lose money, you raise money, you lose money. And that's, of course, the game. But Can you scale your idea through that? Do you have a defensible moat? And can you really get traction early on? And if we see something like this, we don't necessarily have to know the industry. We'll go find somebody who knows the industry and go validate what we're learning about. It also, there's a good and bad thing about this. It takes me 4 weeks maybe to go through a deal because my dad's in India, my wife's working, and I am the one who has the time. But I have to formulate my thoughts and succinctly expect, hey, here's what I'm learning, here's what I'm seeing, what are your points of view, and then balance that for my family.
And so you're kind of like the one who gathers all the information and the data, makes it more concise so that the entire team can kind of look over it to really understand the different layers and the depth of it. Okay. That's an interesting process. And so is there any personal experiences that you've had that really shape how you invest that kind of got you to this point now? Because you got a really good system laid out.
Yeah, when you read any book about it, first they say you read the theory of it, then you start putting it into practice, then you read some more theory, then you put some more practice, overall way of learning something. So I read a few books and then I joined Seattle Angel Conference. In Seattle Angel Conference, they bring together 77 or so startups per semester. They teach it like a class, and they match that with first time investors or second time investors or basically new investors, and you break it up into groups and you go into each area, you learn from your peers, and whatever you learn through the class, you even have an opportunity to participate in due diligence, which I did have an opportunity to do that as well. So it teaches you a lot and you apply that in parallel on other things that you find on the side. So that's how I've been doing it.
Oh, that's good. I can say, me personally, I'm in that process of learning more and more of how to do the due diligence. I think when you enter the space of analyzing the companies, it's so many different layers and levels that you're constantly learning. You're constantly learning something new, figuring out different things. And like you said, it's like you have to create your own process for it almost to just understand what it is that you're seeing so you can measure the actual value of a company.
Yes. And there's no real, when you look at 77 different startups, not all of them are from Seattle, some of them are from different parts. They don't all have the same pitch deck. They don't have the same format. They don't have the same kind of product. They're in different markets. They're in different verticals. You have to find your own way of figuring out what is important to you. Why is something working for you or not working for you? And if there is feedback that you can give that is useful to each founder, what's it going to be? And you have to do it fast.
And so you said it takes you about a month to look at your deals. And I think a lot of founders listening are curious to this in terms of how long the fundraising process actually takes. So from day one, you meet a founder to you sign a term sheet. What's the typical time frame for your process?
Yeah, I'd say 2 to 4 weeks. Whoever I meet, even tomorrow, if I meet somebody, I would say to them 2 to 4 weeks. And for me, if it's a good week where my wife has some time for me and she doesn't have a very busy week at work, I can find her easily and I can talk to her in 15 minutes. Great. Sometimes my dad's got a busy day back in India. Sometimes the person I need to talk to, who is an expert in that area, may not be available. And so it's basically that. My time is available. So it takes me about 2 days to go through the highest level order bits, like understand the idea, understand the market, understand the competition. What is the business model? Is it viable? Does it fit my investment thesis? If so, where does it not fit? I can finish that in 2 days. That's not the hard part. The hard part then is weighing it with the other deals that I have, weighing it to then figure out, simulating what my wife's going to try to say, what my dad's going to try to say, and what the expert I'm going to reach out to is going to say, and before I even ask the question. And so that takes some time. That'll take a couple days. So that we're now at 4 days. And the rest of it is basically chasing people down, getting their points of view, and then balancing it, and then getting back to the person.
Okay, that makes sense. So what's like your typical check size? And do you have a preferred industry? Like, I think you said tech, right? You like focus on the hard tech?
I try to keep my options open on the industry. So right now I have 4 investments, one in on-rail retail in Guatemala, one is an survey company in San Francisco, one is a surge supply company. They make the best paper straw on the planet. It stays in water for more than 5 hours. And the fourth one is through Seattle Angel Conference. It's HIT Power. They do lead acid battery replacements. Typical check size for me is 25,000. I'm looking for a 30x return in 10 to 15 years.
I love it. Okay. Founders listening, you see, We're getting a good breakdown here. He came ready and prepared. I like it. And so I want to talk a little bit more about just your overall goals as an investor. I always think it's good for investors to share what it is that they want to do and the impact they want to have. Because founders are so focused on trying to get money from investors, I don't think they put enough time and energy into understanding investors. So I would love to hear more about your personal goals and what you want to do and accomplish as an investor.
I'd say there's three things. In the long term, I want to have a lasting impact as a mentor, coach, connector, collaborator in the startup space. That's the long-term goal I want to have. The medium-term goal is I want to be successful with respect to backing startups that are successful. More of the money that I make will go back into backing successful startups, therefore freeing me my time up to invest more time into the area. And the third, with respect to investments, I'm trying to find unique ideas in the intersection of technology and AI. This doesn't have to be in hard tech. It can be hard tech. I understand hard tech. And my value addition is basically I'm trying to see how I can connect the people with the locality, with a specific set of customers and or investors. And that's how I see myself adding value.
I like
Um,
that.
and I do see that it's important to have a match in personality, in goals of the investor and the founder. There isn't always a match, and that usually takes some time to figure out. It takes more than one or two meetings to figure out whether or not we're on the same page, whether or not we want to do the same kinds of things. And there's no foul about this. If I'm not the right investor for you, I will work hard to find another investor that I think is right for you.
Yeah, I think a lot of founders would appreciate that kind of connection. One thing founders always ask me is if the investor I'm connecting them with can add value outside of money. And I think that's a really key thing for an investor to add some type of insight or connection, some type of just usefulness outside of just, hey, here's some money, go figure it out. Because I think that also builds on a relationship as well.
100%. I was talking to a few other more experienced investors, and the two things one person said earlier this year was if you can find a way to connect the founder to potential customers of their products, that is gold. By far the most important thing that you can do. The second thing you can do is anything along that way. If they can find people who can find customers, or if they can find people who can find investors. But 100%, it's significantly beyond take the money and go.
Yeah. And I think there are some investors that also are a little aggressive who might meddle a little bit too much. So I would love to hear your perspective on how much you interact with the founders you invest in. Is it like once a month, or do you want emails once a week? Like, what does your interaction and engagement with founders look like?
Yeah, my first investment taught me a lot, and that person was ex-Amazon. And so he writes quarterly emails, like the way Jeff Bezos writes to shareholders, very, very much like that. So I enjoy reading his emails once a quarter. It gives me a good idea of where he's going. I can always ask him a question in email. He'll get back to me within a week. He's in Guatemala, so I understand if he needs to talk to me or if I need to talk to him, I'm always able to find time with him. That's not a problem. I do not want to waste people's time. I look at it if you're thinking about it from a dating point of view, the number of messages you send should be proportional to the number of messages they send.
Yeah.
So, like if they send you two, you should send no more than two. Is the way I think about it. And I try to keep my messages on LinkedIn unless I'm meeting them in person, which could be a text or an email, and that will be very brief and short. I want them to focus their time on solving the problem they're supposed to be solving.
I love that because I was going to get your perspective on LinkedIn too, because I find that most investors hate it because they get so much inflow of just founders and operators and people. But I also think it's good because it's so organized and you can get to a lot of people really fast if you have a presence on that platform. You can get a lot of deal flow there.
It's true. It's true. I read a couple of books and all of them basically say if you have to start somewhere, you should start on LinkedIn. And I am yet to start. I'm yet to master it, but I plan on doing that. I plan on using that more often, and I do get some deals from it, and I do respond to my messages on.
Yeah, that's how we got you here. Now, before we go, I would love if you can give if founders some advice, some insight, specifically on the fundraising, on It could be anything from how they connect with investors to how to pitch. Those are the questions I absolutely get the most.
Yeah, two things come to mind. First, it's super important that you already have a 1 minute pitch, a 3 minute pitch, and a 5 minute pitch. You should already have these. You should already have rehearsed them. You shouldn't be tweaking them towards the end. This is not a final exam. Right? You should have finished rehearsing them multiple times. You should be very confident in delivering any of these at any time. As long as you have that, whatever your pitch is not very relevant, right? As long as you have confidence in delivering the 1, 2, and 3 and 5 minute pitches, that is where I think success is. I saw 200 pitches in the last 2 months, and the ones I remember are the ones that clearly articulate the customer problem and how you're solving it. On fundraising, as long as your product is clear and your way of operations is clear, the money will follow, is my personal opinion.
Wow, that's a really good breakdown. And when you say clear, can you elaborate a little bit more on clear? Because I've had some investors tell me they specifically want, the numbers of the traction and like very, very specific details. Is that what you're referring to? Or are you referring to like understanding the marketing or competition and things like that?
I'm saying both. I've only seen maybe 3 people so far, and those are the 3 I've invested in, who have been able to answer every question my family office has thrown at them at every altitude, at any time, and with consistency. So if it is like, what do you do? They're able to answer it very clearly. Why is it important to your customer? Great. How are you solving it? And how are you better than your competition? Very simple, high-level questions, but they are very clearly able to articulate exactly why they're doing what they're doing and nobody else is. And then I ask about what you're doing on specific finances. And there's a couple of angel groups I'm a part of. So there was a shadow program who came with me to a specific deal. And they were asking all kinds of serious financial questions, which I wouldn't even think of asking. But the answers and the way they answered it, more importantly, gave me confidence in them.
Wow.
So they knew their stuff. If I were to take it back to university, it's like defending your dissertation, right? Like, can you defend your dissertation? If you can, you're a doctor. Very simple.
That's a simple way of putting it. I like it. I like the breakdown. Matt Nishanth, thank you so much for being such a great guest. Can founders and listeners of the show reach out to you on LinkedIn?
Absolutely. Happy to help in any way I can.
All right.